Hello everyone. Today we are going to discuss a very interesting chart, that is gold, because gold is approaching a level that could decide the next major move. Will buyers take control, or are sellers preparing for another letdown? In this video, we will analyze the XAU USD chart using professional institutional concepts including market structure, volume profile, and key supply and demand zones. By the end of this video, you will know the important levels to watch before placing your next trade. Rather than predicting the market, we will focus on what chart is telling us. Let's begin with the higher time frame. Here is the very interesting chart of the gold. We can see the price action of the gold here. And I'm using the chart of gold spot versus US dollar, and the time frame is daily. On the right hand side, we can see the price of the gold in terms of dollars of 1 troy ounce of gold. So let's begin from here. Initially, the market was in the balanced state here. Okay, that is nothing but both the buyers and sellers agreed with the price levels. So this was from the period of April 2025 till September 2025. The price level was 3,200 to $3,500. Then the price broke this particular level and the market was in the imbalanced, and it went till 4,400 levels. Again, there was a sideways movement, consolidation, or market was in the balanced state for the brief period of moment. Again, the price broke this high, that is 4,400 levels, and straight it went till 5,600 levels, which was the highest price of the gold. And here we can see from this particular point, from this particular price level, there was a sharp sell-off, or the crack of the price begins with this particular candle, that is wide range red color, very powerful bar, which took the price till this level 4,400 levels, because initially this was acting as a resistance and now this is acting as a support. From this particular level 4,400 levels, again the market bounced till 5,400 levels, and again it came till $4,100, where the 200 MA was acting as a very strong support from where the market bounced. And this particular moment, it changed the entire structure of the market. Initially the trend was upside. Because of this particular movement, here we can see the lower low and the lower high, which changed the structure of the market towards the downtrend. And here we can see the market or the price, it broke the 200 MA period moving average, which was initially acting as a strong support. With this particular candle, we can see this very powerful wide range red color bar. And now we can see the price is at very important levels, that is the bottom is 4,000 levels and the top is 4,400 levels, because initially we can see here the market spent some time here because market was in the balanced state. The price of the gold is in that particular level, that is 4,400 levels and the 4,000 levels, and market already tested the 4,000 level twice. So if the market breaks this particular level, the low, that is 3,950 was the previous low. If the market breaks this particular level, then there is a high probability that the price would go lower price, that is in the range of $3,500 to $3,300, because we can see here there is a very low volume here. So there is a, if the price breaks this particular level, then there is a high probability that the price would go and test these particular levels. And one more important thing is we can see here the volume. The highest volume is here present at this particular level, and the point of control is here. This yellow color line is nothing but the point of control. This comes exactly in the price range of 3,300. price levels. So this is the very important price level for the long positions with the strong reversal patterns for the confirmation. And three important factors which would influence the price of the gold, that is nothing but number one is the inflation rate, which was relieved yesterday, and it came cooler or lower than the expected, and which is very good. That is the reason why the price of the gold, it bounced from $4,000 to $4,100. And second factor is nothing but the price of the dollars. If the price of the dollar increases, then there is a high probability that the price of the gold will come down. And third is very important, that is the Fed rate decision, which is going to be released on the end of July. So we have to wait for this data and take the right decisions with proper risk reward management and stop loss. If this video is helpful for you, kindly share it among your friends